Good afternoon, everybody, and thank you for joining us today. We might just wait a few seconds as we're joined by our attendees for today's webinar. So my name's Anne-Marie Carmichael. I'm responsible for corporate partnerships and events here at HFMA. Welcome to today's webinar, which is titled Unlocking Employee Benefits, Strategies for Finance and Payroll Leaders. And it's proudly presented by our friends at Maxxia, and we welcome them here today. As many of you will know, Maxxia has been a long-term corporate partner of HFMA and is a valued and very proud supporter of our annual HFMA Awards program, which this year has attracted a record number of nominations. It's a true reflection of the incredible talent and dedication for the work that's being done across our sector. Today's session will explore practical and strategic insights into salary packaging and fringe benefits, designed especially for finance and payroll leaders navigating a changing landscape. With increasing costs of living pressures and evolving employee expectations, the session will guide us through the complexities and opportunities of modern benefits programs. We are delighted to be joined by Julian Walter, the implementation lead at Maxxia, who will lead today's session. We have Peter Robertson, the regional manager for customer development in Victoria, Sharon Mackenzie Pringle, taxation and compliance manager, and Chloe Wenborn, who's the marketing lead for Maxxia and RemServe. Together, they'll bring technical insights, case-based strategies, and compliance-focused recommendations, including a close look at EV packaging and FBT compliance challenges. So again, thank you for joining us, and let's get started.
Thank you so much. Just before we get started and I hand over to my colleagues, I'd like to do the acknowledgement of country. I'd like to acknowledge the traditional owners of the lands on which we meet today and pay my respects to elders past and present. I'll be handing over to Peter, who'll be then handing over to Julian.
Welcome everyone, and thank you for joining us today. We're excited to bring you this session focused on unlocking the full value of employee benefits with a particular lens on finance and payroll professionals. We've had a brief introduction. Some of you may know me. I work in the client development space for Maxxia. Julian, just to extend on his introduction, he leads our implementation team. So he spends a lot of time working with teams on implementing benefit programs across our business, and is certainly someone very capable of speaking to the topic today. We've also got Sharon with us today. Sharon is an expert in tax and compliance, FBT, GST, corporate tax legislation, and Sharon is responsible for all things compliant related to our programs. And you've already heard from Chloe. Chloe is our marketing lead for Maxxia. So just some quick housekeeping. We have your pencils ready and jot down some questions. We'll be taking the questions at the end of the session today. Today's session is part of our ongoing collaboration with HFMA, as Anne-Marie mentioned. Maxxia has been a partner with HFMA for 8 years. We've been supporting the health and finance community through our annual sponsorships of state and national events, and we're a very proud sponsor of the awards, which Anne-Marie mentioned, which celebrate excellence in healthcare finance. As an ASX-listed company, we are recognised as one of Australia's leading providers of employee benefits. We help organisations like yours unlock the full potential of their benefits programs, delivering meaningful outcomes for both employees and the organisation. Currently, we manage around just under 400,000 salary packages across the country, of which 140,000-ish are your colleagues in the health sector. We also manage approximately 77,000 novated leases across Australia. So I'm proud to say we can be considered trusted experts in this space. Together with HFMA, we're here today to share strategic insights, technical know-how, and practical ideas to support finance professionals and help you unlock the value of employee benefits. What you can expect. Firstly, we'll explore the finance team's role in delivering what employees expect from their benefits programs. Secondly, we'll cover the nuts and bolts of delivering a salary packaging program effectively. And finally, we'll look at what new benefit programs and new options are out there for your employees and the challenges in meeting the requirements. At the end, we'll have a bit of time for Q&A, and I expect you'll have some questions for Sharon and the team. So before we dive in to the details, it's important to zoom out and acknowledge that in 2025, workforce expectations, economic uncertainty, skill shortages, which I think you're all aware of, and policy shifts have prompted organisations to rethink traditional approaches to employee benefits. We are seeing changes in the role that finance and payroll teams are required to play in both managing the complexity of benefit programs, particularly as they relate to the ongoing changes to FBT concessions and compliance. And then the additional responsibility for reporting organisational compliance to the ATO. With the rising cost of housing, groceries and fuels, employees are reassessing the value of their total compensation, and their expectations for benefits are higher. As employees' expectations evolve, so do the opportunities to deliver smarter, more valued benefits. I'll be handing the presentation over to Julian now to take you through how benefits programs can help you respond to today's workforce needs while delivering cost-effective and compliant outcomes for your organisation. So Julian, over to you.
Thank you very much, Peter. So, good afternoon, everyone. Today, we're going to be looking at how salary packaging actually works from a finance and payroll perspective. This will include covering off how deductions are processed, the importance of integrated payroll systems, and what makes a salary packaging provider or your in-house program truly compliant. So just for a really quick rundown of salary packaging, which is also sometimes known as salary sacrifice, this is an arrangement where an employee agrees to receive less take-home pay in exchange for benefits provided by their employer. These benefits are paid from the employee's pre-tax salary, which can therefore reduce their taxable income. We can understand the benefits from an employee perspective, but what work does this create for the finance and payroll teams? So step one, we recommend, whether it's your benefits provider or your in-house team, to use detailed deduction reports as an efficient way to manage your benefits. Step two, instead of requesting invoices for each pay cycle, your team can then upload deduction reports directly into the payroll system. Step three, this then allows employees to receive their pre-tax benefits automatically. By taking this approach, it's aimed to reduce administrative workload, minimizes errors, and ensures employees consistently receive their benefits in a compliant manner. Also of note, we recommend that the payroll file is a changes-only payroll file, meaning that providers only request an employee's initial deduction amount for their benefits, and it then becomes set and forget. So the only time that the deduction would need to be amended is if they then appear on a future payroll report. Now, let's also talk about compliance, about built-in compliance support. It's your obligation to meet FBT and ATO guidelines. However, a best practice provider can support you. To help support you, it's crucial that the salary packaging systems have built-in compliance when they integrate with existing payroll processes. Without this kind of structure, many teams end up relying on manual workarounds and face greater compliance risk. So from an FBT reporting point of view, whether you have a third party or do it in-house, we recommend quarterly audit-ready summaries that will break down employer and employee liabilities that have been formatted to support your business activity statement or BAS and annual returns. For legislative confidence, it is critical for your teams and providers to stay in step with fringe benefit tax legislation by annually auditing systems to support compliance with FBT Act and ATO guidance. When it comes to GST and ITC management, we also recommend GST and input tax credits are managed based on actual spend and are aligned with the ATO categories. Without this kind of structure, many teams will end up relying on manual workarounds and face greater compliance risk. Now, although health services can rely on their own tax and compliance teams to review their systems and processes, we're increasingly seeing health services move to seek support from third parties who are experts in salary packaging regulations that are able to then give you clean data, less admin, and greater confidence that your benefits program is doing what it should be. So we'll talk about some common challenges for finance and payroll teams. For fringe benefits tax management, again, important to stay compliant with FBT obligations, and that can be complex. We will be looking at structured FBT reports and helping to manage shortfalls if they occur. For input tax credits, claiming GST credits requires some precision. So we will be looking at how to track the actual spend, align with the ATO categories, and provide the data you need to claim that correctly and confidently. And then for luxury car tax and the electric vehicles opportunity, salary packaging for electric vehicles or EVs is a growing opportunity, with eligible EVs now exempt from FBT. It does come with its own compliance requirements, especially when managing high value vehicles and luxury car tax thresholds. So we will be exploring the rules while making the most of this benefit. Let's give a really quick run through on what fringe benefit tax is. Fringe benefits tax, or FBT, is a tax that employers pay on certain non-cash benefits provided to their employees, things like cars, parking, or meal entertainment. It's a key part of salary packaging and must be managed carefully to stay compliant and protect the value of your program. So the key things are reporting. Regular reporting is essential to maintain compliance. Quarterly reporting, we recommend that your in-house team or your provider provides quarterly reports that outline your organization's FBT position. Those quarterly reports should outline individual employee liabilities, and payment summaries should also include grossed up values designed to support you in meeting the ATO requirements and are formatted for audit readiness. If there's a situation where an employee doesn't have enough deductions to cover their FBT liability, this can result in a shortfall. We recommend a salary packaging specialist as they can help you manage these shortfalls if they occur throughout the year or at the end of FBT. The key thing here is about reducing workload. So ultimately, by using a specialist provider to manage these, it reduces your administrative workload and ensures all liabilities are handled compliantly without delays or confusion. Now, ideally, a salary packaging provider or an in-house team will have a compliance approach that covers the full FBT lifecycle and not just shortfalls. So throughout the year, there would be FBT year tracking. So for compliance reasons, your FBT year should be aligned to the ATO timeline. So from the 1st of April to the 31st of March. Comprehensive reports should be tracked with comprehensive quarterly and annual reports provided that include the type 1 and 2 benefits, reportable fringe benefits amounts or RFBA, taxable values, and in quarter 4, the car benefit breakdowns. Reports should be delivered in Excel with one source formats available for quarter 4 if needed, ensuring that you've got the right data in the right format at the right time. Being tax smart means you can use reports to support you with your audit, BAS, and annual compliance as required by the ATO. So if we now focus on input tax credits or ITCs, this is an often misunderstood or under-leveraged component of salary packaging, but it has real financial implications for your organisation. ITCs allow you to recover the GST paid on eligible salary packaged expenses, and when handled correctly, they contribute to a more efficient and cost-effective benefits program. ITCs are a key part of salary packaging from a tax perspective. When employees package items that include GST, such as car-related expenses, that GST can often be claimed back by the employer, and that is done through their business activity statement or BAS. We recommend that your provider or in-house teams need to report the input tax credits based on actual spend rather than projected or budgeted amounts. By doing this, it means you won't be over or under claiming on your BAS, and there's no need for complex reconciliation at the end of a lease or a salary packaging arrangement. You should receive or request these reports monthly, giving you the detail and timing you need to keep your GST reporting accurate and compliant. So if we just have a look at the example on this slide, you've got Jane Smith, and she's gone to the supermarket, purchased $100 of groceries out of her own pocket. The transaction will be recorded on her account and reported on as required. So in this case, because the shopping attracts GST, GST will be calculated. And so in this example, 1/11 of $100 is equivalent to $9.09. That GST will be reported back to the employer through the input tax report on a monthly basis. And the employer will then use that report to complete their BAS statement to claim back the $9.09 on behalf of the employee who paid the GST in the first place. Now, we're going to talk about repatriating ITCs. So if your organization elects to return ITCs to employees via their salary packaging accounts, the process is really simple and should be fully supported by your provider. So step one, to do this correctly, you, that is the employer, will need to complete your BAS using the ITC report provided. Step two, you will then need to upload an ITC income list through your payroll portal, incorporating any changes. So this just tells us how to distribute those credits to the employees. Step three is to make the deposit of the funds. So we'll then match that up to the income list we have. And your provider would then allocate them directly to each employee's salary packaging account. We recommend that every transaction is recorded so that you'll have a complete auditable trail of all ITC activity. Ideally, your ITC process, whether it's done in-house or with a provider, is built with compliance in mind from the start. The reports will need to align with ATO categories and should be structured to feed directly into your BAS, helping to reduce errors and streamline the submission. Employees also should receive from your teams or provider clear records of the GST paid and the credits applied, which ultimately supports transparency and trust. It's also ideal, as we said, to report on the actual spend so that there's no need for reconciliation at lease end, which is ultimately making your job easier and reducing compliance risk. So we'll now move on to electric vehicles and luxury car tax. So these are two areas that are gaining momentum in salary packaging. Recent legislation means that eligible EVs can now be packaged without attracting fringe benefit tax, delivering significant cost savings for employees, often amounting to thousands over the life of a lease. For employers, it's a great chance to support sustainability goals, attract talent, and position your organization as forward-thinking. So let's look at how FBT-exempt EV packaging works. So step one is an eligibility check, which confirms that the vehicle meets FBT-exempt criteria, for example, price cap, emissions thresholds. Step two is the lease and setup. So we arrange the novated lease and bundle the running costs into one pre-tax deduction. Step three is ongoing support. So your benefits provider should then manage reporting, compliance, and employee queries throughout the life of the lease. However, EV packaging comes with some added complexity, particularly around depreciation caps and luxury car tax on higher value vehicles. So in the next few slides, we'll break down what the relevant thresholds are and how to manage these leases without unexpected tax impacts. So while EV packaging offers great tax benefits, it is important to be aware of the luxury car tax implications for vehicles that exceed the ATO's depreciation threshold. So with the depreciation limit, any car, including EVs, can trigger luxury car tax issues when the vehicle exceeds the ATO's depreciation threshold, which is currently $69,674. In these cases, lease payments aren't fully tax deductible, which can create a financial gap for employers. Higher lease costs may reduce your organization's claimable deductions. Our recommended solution to manage this is ask your provider to calculate the difference and apply a luxury car depreciation allowance, which we tend to refer to as LCDA, to ensure that you're not left out of pocket. Once again, we recommend quarterly reports that track relevant leases and show exactly how much LCDA is being collected and returned to your organization via payroll, helping offset the reduced deductibility and maintain your financial position. This is a straightforward way to ensuring that you are not disadvantaged from a taxation perspective when allowing your employees to have a novated lease on what's deemed a luxury vehicle. So we're now going to head into the final part of today's session. So in a moment, we're going to open up for questions with our in-house tax and compliance specialists. So please feel free to start thinking about any topics you'd like clarified. After the Q&A, we'll share a few closing thoughts and remind you of the resources available to help you take the next step. So we'd love to hear from you, whether you have a question about your organization's specific needs or want more clarity on any topic. This is your chance. Sharon and myself and Peter are here standing by to answer.
Thanks, Julian. That was excellent. So have we got anything that's come in, or?
So what we're suggesting is if anybody would like to speak to the Maxxia team, just raise your hand and we'll unmute you to talk, or you can put your questions in the chat function if you didn't want to speak. I have also been sent a couple of questions, so we'll just wait to see if there's anybody that wants to raise their hand and chat to the team. It's too informative, I think. We've given them everything they need. We've got the team on hand here, so it's a perfect time. No question is a silly question. No, okay. I've had a couple that have just been sent through to me. For payroll teams juggling multiple systems, what's the integration effort like and how flexible is the reporting process?
So I think, Julian, would that be something you'll take?
Yes, certainly. So with regards to that, look, when we implement employers, the key thing is we're working alongside payroll, finance, and HR throughout that implementation process to understand your requirements and how they, fit with the reporting that we provide. With that said, look, because of our experience and expertise in this industry for quite a long time, most of our reports have been designed in such a way that we understand that clients all have different systems. So we've sort of designed most of our reporting to be able to interact with really any system. But again, as I said, we do work with those teams to understand any individual requirements and work to meet those.
Okay, thanks. Nothing else further? Anne-Marie, you mentioned a couple.
Yep. I've got another couple here. I'm just waiting to see if there's any hands raised. No. Okay, I've got another one. We often think of benefits as a HR-led initiative. Why should finance and payroll teams be more involved in shaping these programs?
I suppose I can maybe throw some light on that because I deal with most of the finance and the HR teams as I go around. The question is, why should they be involved more? I'm not sure there's a reason why. It's just that it's a requirement. That in the end, it's the increased reporting and compliance issues that brings the payroll and finance teams in. As most would be aware, it's a real mixed bag. I see lots of organisations, large publics, where HR run the the benefits program, and then I see others where it's a completely finance function because there's various revenue opportunities and attachments to it. So it's a mix. Why should they be involved? I'm afraid to say it's because they have to with the compliance issues.
Fabulous. I've got 3 more here, actually. So do your quarterly reports include enough detail to feed directly into our BAS preparation, or will we need to supplement with internal reports?
I think that's a Julie. Hold on, it might be a Sharon question.
No, I can answer that one. Yeah, Chloe, you'll just need to. Sorry. In terms of the ITC and GST reporting, the reports will show any GST incurred through the salary packaging program. That information can be uploaded straight into your BAS requirements. We do both the GST claimable, and where the employee is using a post-tax method for their novated lease, we do the GST payable. So we can provide both claimable and payable, and we also provide a net figure. The only additional information you will need to put into your BAS is any internal GST.
Great. All right, I've got 2 more here. From a payroll governance perspective, how do Maxia's reports support audit readiness and ATO compliance?
This one? Yeah. So in terms of the payroll reports, they will provide obviously all the detail required to deduct your pre and post-tax requirements. That is then supplemented with the fringe benefit tax reporting that we would supply to you on a quarterly and then annual basis. And the reports on the annual basis is what you would feed into employee payment summaries. All of our reports have been built in line with the ATO requirements around the FBT Act.
Excellent. And I've got, if our internal tax team wants to review the packaging structure in detail, how can Maxia support that process?
So if they want to have a look at any of the internal reporting that we would supply, that we could touch base and meet with any employers that would need that confirmation and consolidation on how we provide the reporting.
Excellent. All right, that's the rest of the questions. Do we have any other questions from our attendees at this point in time? No, okay. Is there anything else that we'd like to cover off, team?
Yeah, just before we go, we've got some just resources for you. So we've got some downloadable resources. We have some further information on EVs, and we also have a health sector specific landing page for kind of all your Maxia information. We've got some QR codes there. I'll leave it up for a second. If any of you are interested in that, please use your phones, get your phones out now and use the QR codes. The EV guide is actually a downloadable PDF for you to refer to.
And we'll share them in the wrap-up email as well, Chloe.
Wonderful. And lastly, if any of you want to speak further about any salary packaging or questions that you may have, please post this. I'm sure lots of questions come up post webinar. Please feel free to reach out directly to Peter. He'll be happy to answer your questions or direct where needed. His information is up there for you, and this will also be shared post webinar as well.
Excellent.
I think, that's all from us.
Thanks so much, Chloe, and to Julie and Peter and Sharon, thanks for being involved, and the entire Maxia team. Very valuable and very informative presentation, so much so that there was no questions, which is a good thing, apart from the one that came through on the little private chat there. And we really appreciate the, the practical takeaways that you've shared with us today. As Chloe said, the Maxia team is really happy to be contacted after the event. So please reach out to them and have your questions asked or engage at the right time. Just a few quick reminders before we close for the afternoon. As you know, the conferences are all coming together really well. We do encourage you to register and come along to share, learn and network with your peers. Be sure to keep an eye out for the awards presentation sessions at each of the state and national events, and get along to chat to the Maxia and RemServe teams who will be actively participating in those events as well. Special interest groups are going from strength to strength. They meet regularly via Teams, and again, another way to stay connected with your peers across Australia. Always check your spam folder and give us a favourite to make sure that we get through those health service firewalls, because they can be strong. And you will receive a short feedback survey after the session. We do love to hear your thoughts. We love to hear what you thought of this particular session. We'll just double check to make sure there's nobody that wants to got a last minute question. No. All right, well, thank you once again, Maxia, both for your time today and the support that you give to HFMA and our members. As we said, there's plenty to take away and discuss. Let's keep the conversation going. Thanks to everyone that joined us this afternoon, and have a great rest of the day. Bye for now.
Thanks, Anne-Marie. See you.
Bye.
Bye.